So, good evening, all of you. My name is Ravan Kumar. I'm a qualified cost accountant and I'm an all India ranker in CMA final. And I'm here to teach paper 17 CFR. So, corporate financial reporting. Corporate financial reporting. So, before going to the topic, so just so we have a look on the total syllabus and the exam pattern. So coming to the exam pattern relating to the CFR. So here question number one is compulsory question and we have objective questions and 10 questions are there, each carries 2 marks, total 20 marks. And out of the 20, 1 mark is for key answer and 1 mark is for justification. 1 mark is for justification. And the remaining question number 2 to 8. Question number 2 to 8. So out of that we have to write 5 questions out of 7 and each carry so 16 marks, total 80 marks. Total 80 marks. So this is the pattern of a exam. So relating to the paper 17. And then coming to the syllabus. The first one is gap and accounting standards, gap and accounting standards. So here gap is nothing but what? Generally accepted accounting principles. Generally accepted accounting principles. Then coming to the accounting standard, we cover accounting standards and IFRS. So and along with that IAS, sorry, Ind AS. Ind AS. So these we are going to cover. Then coming to the second one, business combinations and restructuring. So in this topic, we are going to discuss accounting for amalgamation, measure, and accounting for demeasure, and how to calculate the goodwill or purchase consideration, etc. And coming to the IRS, internal restructuring, reconstruction, we are going to discuss. And the third one is consolidated financial statements. Consolidated financial statements. In this topic, we discuss how to prepare the consolidated statement of financial position and consolidated statement of P&L and how to what is the procedures for preparation of the consolidation. This is the covered in the third and the first part covers 20%, 20 marks. And the second part covered 20 marks and the third part covered 20 marks. Third part covered 20 marks. Then coming to the fourth part, development in financial reporting, and other items of reporting. Other items of reporting. So in this case, we will discuss the valuation of goodwill and shares, valuation of goodwill and shares. Then we discuss GST accounting, GST accounting, and another one is share based payments, ESOPs, share based payments and its related accounting, and XBRL reporting, XBRL reporting, and other developments if any. So this part covers around 25 marks. This part covers around 25 marks. And the last session is government accounting. So this covers around 15 marks and the total 100 marks paper. So total 100 marks. Okay. So these are the syllabus we are going to cover in this whole session. So first one is GAAP and accounting standards. So in accounting standard we cover accounting standards, IFRS and Ind AS, and business combination and restructuring, reconstruction, consolidated financial statements, development in financial reporting and other items of reporting, and the last one is government accounting. So here the whole syllabus is divided into 5 parts. The whole syllabus is divided into 5 parts. Each part carries minimum 20 marks. Each part carries minimum 20 marks. So overall paper is for 100 marks and the time is 3 hours. Nothing but 180 minutes. So we have to plan in such a way. So the total time per 100 and per mark we have 1.8 minute. So for example, coming to the first question, we have 20 marks. So 20 into 1.8 means 36, means we have to complete the question number 1 within 36 minutes. If you prepare in that way, then we will give the attempt for 100 marks easily. So plan accordingly and then study well based on that plan. Okay. Then before this is the whole syllabus and the paper exam pattern relating to the CFR. And before going to that, coming to the what is meant by CFR, coming to the paper name is coming to the paper name is Corporate Financial Reporting. So what is meant by CFR? And till now we discussed what is meant by an accounting. Accounting is nothing but it is an art of recording, classifying, summarizing, analyzing, and interpreting the financial information, and which is communicated to the users of financial statements. Then we discussed. Then we have the knowledge on how to prepare the financial statements. As per Schedule 3, Part 1 is there, Part 2 is there. So preparation of the balance sheet and preparation of the P&L statement and corresponding notes and accounts are there. So in this session, in the total CFR, we does not discuss about the preparation of financial statement. Here we are going to discuss only the reporting of the financial statement. So here the corporate financial reporting indicate what? The reporting of financial information of the company to the users of the financial statement. So reporting of financial information of the company to the users of the financial statement is said to be about corporate financial reporting. Here we use the word financial information. So financial information is provided in two ways. One is communicated in terms of what? Financial results and financial position of the entity. So, reporting of the financial results and financial position of the company to the user. Here, financial results indicate what? What is the profit or loss relating to the respected entity, and financial position provides those are represented in terms of what? Assets and liabilities. Assets and liability. So reporting of financial information of the company to the users of the financial statement is technically called as what? Corporate financial reporting. Here use the word users. Use the word what? Users. So what is meant by users of financial statements? What is meant by users of financial statement? So users are nothing but, if you observe in the day-to-day business activity, day-to-day business operation, number of parties deals with the business. Every party requires the financial information of the company. So based on the financial information, they will take the decision whether they will continue with the business or not. So in such a way, those persons who deals with the business in the day-to-day business operations are technically called as what? Users. Those are called as what? Users. So users are nothing but, so there are internal users are there and external users are there. In external we have connected users are there. In external we have connected users. So coming to the internal users, so internal users are nothing but they cover owners and managers, owners or partner or managers or directors, nothing but board of directors of the company. Next, coming to the external, like employees are there and debtors or called as customers and suppliers and government and bankers or finance providers or investors. Those are also called as what? Investors. And at large, the public. At last is the public. So users are nothing but those persons who deals with the business in day-to-day operations of the business are called as users. So here owner, these are also called as what? Stakeholders of the entity. Stakeholders. So stakeholders are nothing but covers owners, partners, or managers, or managing director, or board of directors, or employees, debtors, creditors, government, bankers, or finance providers, investors, or public. These are all covered under what? Users of the financial statement. And everybody requires the financial information. Everybody requires the financial information, but nobody requires the same financial information. For example, coming to the employees, they need the financial information. They want to know about whether company has a profit in the current year or not. Because their expectation from the current year information is nothing but whether management will provide hikes in the subsequent period or not, whether management will provide bonus in the subsequent period or not. Coming to the creditors, so they need the information because they need to assess whether company meet the regular obligation or not, whether company able to pay total amount within the due date or not, and they need the credibility of the company. And relating to the bankers also, they need same information. Coming to the government, they need to assess what is the total income of the company, whether company disclose the total income or not. If it disclose, then what is the tax, whether tax paid by the company completely or not. That is required by government. So in this way, if we observe, everybody needs the financial information, but everybody requires the different financial information. So we have to report that financial information in such a way which is useful to each and every person who deals with day to day, deals with business in day to day business operations. That's why we need what? Reporting. We need what? Reporting. So reporting of the financial information of the company to the users of the financial statements is a technically called as what? CF or corporate financial reporting. Corporate financial reporting. Here we use the word financial statements. Financial statements. So here, so what is meant by financial statements? Financial statement. So financial statements are nothing but those are the structured or organized documents prepared to know financial results and financial position of the entity. So financial statements are nothing but those are the structured or organized documents prepared by the entity to know the financial results and financial position. So generally financial results are provided by income statement and financial position is provided by position statement of the entity. So coming to the components, of the financial statements. So here components of the financial statements contains five components. The first one is statement of financial position. That is balance sheet. And next, profit and loss statement prepared for the year ended or for the period ended profit and loss statement. And the next one is cash flow statement. Next one is statement of changes in equity. And the last one is what? Notes on accounts. So here the first one is what? Statement of financial position. So statement of financial position is nothing but what? Balance sheet. And that balance sheet is prepared by considering what are the assets and liability balances at the end of the year. And it indicates what is the strength, financial strength and financial weakness of the entity. Those are represented in terms of assets and liabilities. Next, coming to the P&L statement, it is used to show the financial result of the entity, whether it is a profit-making organization or a loss-making organization. So, what is the profit or loss for the current year? And it indicates cash position of the entity. Cash flow statement indicate what? Cash position of the entity, nothing but liquidity position simply. And statement of changes in equity indicate what is the differences arise in the owner's fund during the year, that is shown by statement of changes in equity. But statement of changes in equity and the cash flow statement are not mandatory for non-corporate entities. And the last one is what? Notes on accounts. So why the notes and accounts is prepared, sir? So notes and account is generally prepared. To give the detailed explanation about the figures mentioned on the face of the financial statement, and to give the detailed explanation about the accounting policies followed while preparing the financial statement. Here, while preparing the financial statement, we follow the number of accounting policies. For example, inventory is valued at cost or NRV, whichever is less. So, such type of accounting policies, whatever you follow, should be disclosed at one place. That is nothing but what? Notes on accounts. And here, the detailed explanation about the figures of the financial statement, like for example, debtor, total balance of the debtor, 15 lakh is there. Then, which contains, what are the components of the debtor? The detailed details of the individual debtors, like Mr. A, Mr. B, C, D, E, Ram, Sham, Sita, Pita, etc. So, these are all mentioned here. And another one is, if any explanatory notes required for any item, those are also provided here. For example, on 31st March 2021, the value of inventory around 25 lakh is there. But generally some period is there before, some period is there in between date of balance sheet and date of approval of the financial statement. General financial statement should be approved by the board of directors. In between period, one activity happened, nothing but some fire accident incurred. Then due to that, the inventory lost. That is what events occurred after the balance sheet date. Events occurred after balance sheet date. So in that case, that adjustment based on that, whether it is adjusting event or non-adjusting event, we have to give the adjustment in the on the face of the financial statement. So if it is a non-adjusting event, just give the disclosure in the notes and account. Don't give the reflection of that activity on the face. So that explanation, if you mention the inventory of around 25 lakh on the face of the financial statement, everybody feels that the 25 lakh available even on the date of approval of the financial statement. But is it correct? No. So you have to give the explanation about that element in the notes and account. So on so date some fire accident incurred due to that, so on so worth of the inventory lost. This type of disclosure is required. So that is the main objective of what? Notes on accounts. So these are the 5 components of the financial statement. So one is statement of nothing but balance sheet. Second one is profit and loss statement. Third one is cash flow statement. Fourth one is statement of changes in equity. And the fifth one is what? Notes on accounts. Notes on account. So these are the components of the financial statement. And another element is there. What are the elements of the financial statement? Elements means based on whom these financial statements are prepared. Nothing but what? Assets, liabilities, income, expenses, capital, and cash flows. So these 6 items are treated as what? Elements of the financial statement. Elements of the financial statement. And remember, while preparing the financial statements, we have to follow some regulations. We have to comply with some laws. So these financial statements, so nothing but in auditing we have one topic, nothing but financial statements should represent what? True and fair view. So financial statements should represent true and fair view. True and fair. When it is possible, if they are prepared by complying with all laws and regulations, So laws and regulations are nothing but, for example, in case of company, we need to follow what? Companies Act 2013. If it is a listed company, we need to follow SEBI guidelines. And if the company covered under any labor laws, that labor laws required to be followed. In case of company, MCA regulations required to be followed while submitting the annual reports. While submitting the annual report, these are all covered under what regulation aspects. So financial statement should be prepared by complying with all laws and regulations. And second one is by using GAAP, generally accepted accounting principles are said to be a what GAAP? Generally accepted accounting principles. So generally it contains what? So accounting standards and IFRS or IAS, Ind AS if any. And the next one is qualitative characteristics of financial statements. Qualitative characteristics are nothing but what? Relevance and faithful representation. So relevance and faithful representation. These are said to be qualitative characteristics of the financial statement. We have to provide what? Relevant information only. Relevant information only. So, and we have to provide what? Unbiased data to the respected users. And along with that, some enhanced characteristics of the financial statements are there. Those are nothing but what? Comparability and understandability and verifiability and timeliness and substance over the form and so materiality. Okay, so these are the features or the characteristics of the financial statement. If the financial statement represents these qualitative characteristics and follow the GAAP, and those are prepared by complying with all these laws and regulations, then those financial statements are represent what? True and fair. So here we have one word, nothing but substance over the form. Substance over the form. Substance over the form simply said the reality of the transaction has more priority than the legality of the transaction. So I will explain it in a simple way. For example, coming to the preferences. So generally, the preferences are nothing but as a forming part of the share capital. But in reality, so preferences has the features of, as the more features of data or obligation, nothing but liability feature is there. Because the preferences are required to pay after some period, and it has some fixed rate of dividend. Predetermined rate is there. Fixed rate of dividend is there. So that preference is created as a long-term liability as per IAS instead of forming part of share capital. So we have to consider what reality of the transaction than the legal formality. And another one is the timeliness. Means the data should be provided depends upon availability. As and when the data required, we need to provide. The data must be useful. So to the respected party. If these features are followed, then the financial statement represents what? True and fair. That financial statement represents what? True and fair. So financial statement represent true and fair when they are prepared by complying with all laws and regulations and by using the GAAP, generally accepted accounting principles, and represents the qualitative characteristics of the financial statements. Nothing but relevance, faithful representation, comparability, understandability, verifiability, timeliness, substance over the form, and materiality. And materiality. So this is about briefly introduction about the CFR, corporate financial reporting. Okay.